So this is the fourth year, consecutive year, we're here in London, bringing all the GCC exchanges together with this year, record year, over 300 equity investors attending the conference from all over the world. Obviously London, but also continental Europe, the US, Asia, and also the Middle East. They're here over 4 days, meeting one-on-one and group meetings with all the exchanges and the companies of these exchanges. And also they're here to meet policymakers, the capital market authorities, the regulators, and all the market players of the GCC. Obviously, the international environment has been quite challenging the last few years. And when you look at EM equities, they've been very volatile in the recent years. But I would say the GCC has been quite resilient. The performance of the GCC market across all markets and in equities specifically has been quite resilient. If you look at why, it's really a combination of the domestic factors that are obviously playing in their favor, but also the international dynamics that are playing in the favor of the GCC. If you look at, for example, the volatility and the FX doesn't really impact the GCC. If you look at the oil prices, it obviously at these levels they're quite solid for the region. So the international factors are helping the GCC, but also the local dynamics are very important. The privatization program, the Vision 2030, for example, in the case of Saudi Arabia, the Vision 2035 in the case of Qatar, etc., etc. So it's I would say a combination of both local and international dynamics. When you compare Saudi Arabia with Brazil and India, if that was the question you were asking, today Saudi Arabia is, in terms of weight, as important as Brazil, if not even higher in the MSCI or FTSE EM benchmark. Obviously, India is still a big part of MSCI EM and FTSE EM, but Saudi Arabia is getting out there. And it's becoming a country and a place that international investors cannot ignore anymore. And the Indian market has performed very well. The valuation has been quite high. So the pushback we get sometimes on India specifically is that the market is very expensive. So they start looking at other options. And Saudi Arabia is another option where the valuation look relatively okay, relatively attractive, and also the local dynamics that I was mentioning. So it's becoming by conviction, but also by default, a place where international investors are looking at deploying new capital. Sure. Privatization is a very important reform for any country. And privatization is really what international investors look after and like when they want to invest in a country, or in a region, or in an asset class. So in the case of Saudi and the rest of the GCC, the privatization agenda has been very well received. I would say even extremely well received by international investors. They have a very clear vision. They have very clear reform program, structural reform program that is appealing to the international investors. And if you look at the GCC and the privatization agenda of the GCC versus other emerging markets, it's quite attractive and quite impressive at the same time, like the pace at which the Saudi and the UAE and the Omanis and the rest of the GCC are operating under versus other emerging markets. So I would say the privatization very well received. That agenda is what international investors like. How HSBC can help? HSBC, well, as you know, has been involved since the early days in this privatization agenda. We've been in the biggest and largest IPOs in the region. We've led them as a global coordinator. If you look at the biggest privatization was Aramco, for example, the beginning of that. And HSBC was a lead global coordinator in that transaction. If you look at the fully marketed offering that followed a few years later, HSBC was there. So we're at the heart of that privatization agenda. All our resources, all our intelligence, all our commitment is to make that privatization successful and to help international investors participate in that privatization program. So listen, if you look at the passive, today the GCC represent around 8 to 10% of MSCI and FTSE, which are two large indices that international investors and passive investors follow. So automatically the flow represents kind of that weight. If you look at the active investors, I would say they're still relatively underweight, but it depends on the regions. In the European region, I would say investors are neutral, the Saudi and the GCC markets. In the US, we're still finding them relatively underweight. And our jobs as HSBC is really to educate all those investors that are underweight the market, how to close that underweight, how to participate in that story, in that reform, in that vision. And proof is what we're doing this week at the conference with over 300 equity investors from all around the world coming here to meet all those companies and to start exploring the market. That's how we hope that we can close that underweight for the people that are still not invested in the GCC. Correct. I would say those are the sectors, the small and mid-cap sector are the attractive sectors in the GCC. Why? Because some of the companies in that bucket and some of the business models that operate under that bucket, you won't find them in any other emerging markets. If I can give the example of a sports company like Lijam, for example, in Saudi Arabia, I can't find that many sports companies that operate in global emerging markets that are listed and where international investors can participate in that story. So the small and mid-cap sector is very appealing because the amount of opportunities, the amount of ideas, the amount of businesses that are in that bucket that you don't find in any other part of emerging market is what makes that sector attractive. It's true that liquidity is not sometimes optimal, but this is where the privatization program, the development of the equity market, the liquidity events that we as HSBC and other brokers facilitate will get those companies to the benchmark that is acceptable for international investors. But I would say, just to summarize again, on the small and mid cap is where I find the most attractive opportunities and the most appealing opportunities for international investors, because that's also what grabs the domestic growth story. The domestic stories are really usually present in those small and mid caps. So very interesting sector. And good question. I would say the GCC as a whole, emerging market as a whole, have always had a risk premium that is above developed markets, right? As a general, because of the nature of the markets. The GCC, I would say, has a risk premium that is above what it should deserve. And I think as we move on and as the situation globally stabilizes, the geopolitical international investor will start putting a discount to that geopolitical premium. And once you put that discount in, suddenly the valuations are extremely attractive. So that's what we need to watch for, that when the discount to the geopolitical risk premium that is today in these markets.